Banks don't see one customer. They see tiers of customers. The real question is, on their ladder from broke to $50 million, where do they put you? Because the brutal truth is this: the way your bank treats you has less to do with who you are and everything to do with how much money you have sitting on their servers at any given moment. So let's walk that ladder from 0 to 50 million and find out exactly how the game changes as your net worth climbs. First up, the bottom. If your balance is anywhere from negative to about $1,000, your bank account lives in that painful space between almost empty and oh no, overdraft. You're dealing with minimum balance requirements, monthly maintenance fees, and penalties for tiny mistakes. A $4 overdraft can turn into a $40 fee. A subscription hits a day early, and suddenly your groceries are declined. This is where banking is actually the most expensive. You're paying overdraft fees, non-sufficient funds fees, sometimes even fees just for having the account open. To the bank, you're risky and low revenue, so they squeeze what they can out of you. And if something goes wrong and you call for help, you're in the same generic 1-800 line as everybody else. Nobody knows your name, nobody is assigned to your case. You are a line item in a very large spreadsheet. Now, let's move up one rung. Once you can consistently keep at least a few $1,000s in checking or savings, say between $1,000 and $10,000, the bank's attitude softens, but only slightly. You're still a retail customer, but now you might qualify for no-fee accounts if you hit certain conditions. Maybe you have to keep a minimum average balance. Maybe you need a recurring direct deposit from your job. This is where the bank starts nudging you into their products. They offer you a basic credit card, a small personal loan, a starter investment account. You're still paying them high interest rates and plenty of fees, but there's a little less pressure from overdrafts and penalties because you've got some cushion. Here's the important part. At this level, the bank still isn't really making money from your balance. They're making money from your behavior, from the late fees, from the interest, from the small frictions built into every product. Now, let's say you keep going. You build up $10,000, $20,000, even $50,000 in the bank. Somewhere between $10,000 and $100,000, you stop being invisible and start showing up as what they call mass market growing. Banks track how much of your financial life they control. Your checking account, your savings, your credit cards, your loans. When you keep more money parked with them, they want more of you. At this stage, you start getting those pre-approved credit card offers, personal loan offers, maybe even a HELOC pitched at you if you own a home. Your balances and your credit history tell them you're more profitable and less risky. From your side, the experience improves just a little. You might get slightly better interest rates on savings. Some ATM fees get waived. Maybe they throw in a discount on a safe deposit box. But here's the catch. You're still going through standard branches, standard call centers, standard everything. The treatment is better than when you were broke, but it's not life-changing. You're comfortable, but you're still on the same conveyor belt as everyone else. A lot of Americans park here and never leave. Now, let's go to the first big jump. Once your assets with a bank cross around $100,000 and up toward $250,000, something changes in the background. Internally, they slide you into a new category: mass affluent. Suddenly, you're not just someone with a checking account. You're someone who can buy multiple products. Investments, loans, insurance, maybe even a small business relationship if you're self-employed. You'll notice the fee dynamics shift. Instead of nickel and diming you for everything, they start waiving more fees to keep you loyal. You might get a preferred or gold checking package, higher ATM withdrawal limits, more flexibility with things like wires and cashier's checks. You might get assigned a relationship banker who starts talking to you about retirement accounts, mutual funds, and basic financial plans. The advice is still very standardized, but the tone is different. You become a person they don't want to lose. Now we climb higher. Once your investable assets, meaning the money you could put into investments, not just your house or your car, cross about $250,000, and especially as you approach $500,000 to $1 million, the game changes again. This is where banks start competing for you instead of you chasing them. You're upgraded into some version of preferred client or premium banking. You may get a dedicated relationship manager, someone you can email directly, someone who answers the phone when you call. Daily limits go up. Wire transfers get processed faster. Fees on things like wires, cashier's checks, and certain accounts get discounted or waived entirely. They're less interested in squeezing you and more interested in keeping you. Behind the scenes, you've moved into their mass affluent or starting high net worth bucket. They expect your assets and income to grow, so they try to lock in your whole financial life. Checking savings, investment accounts, mortgage. And if you're a business owner, your business accounts too. The products get more sophisticated. Managed portfolios, structured investments, larger and cheaper lines of credit. The conversation shift from "open this account" to "let's talk about your long-term goals." This is the tier where you stop being punished the most and start being rewarded for your balances. But we're just getting started. Once you hit around $1 million in investable assets, you cross into a world most people never see. Now, banks move you into their private client programs. This isn't the same as walking into a branch. This is a branded experience. Private client, signature, private banking. It still sits inside the big bank, but the feel is different. You get a dedicated private client advisor, a direct phone line, regular check-ins, invitations to exclusive events and market briefings. Standard fees? A lot of them disappear. Lending terms get better. Interest rates on loans and credit lines improve. Limits go up. Flexibility goes up. The bank's mindset flips completely. You're not just a customer. You're a relationship they want to hold for decades, maybe for multiple generations. They start talking about estate planning, tax strategies, how to structure your investments so your income, your kids' futures, and even your charitable giving are all working together. If you own a business, they'll integrate personal and business banking. If you have stock options or multiple properties, they bring in specialists to help you structure it all. From your point of view, it starts to feel like having an on-call financial team. But there are still more levels. Once your net worth climbs into the $5 to $10 million range, you're entering what most banks would consider true private banking. At this point, it's not just one advisor. You might have a small team, a lead private banker, a portfolio manager, and support staff who handle the day-to-day. The bank doesn't just respond when you reach out. They come to you. Meetings at your office, at your home. Secure video calls with personalized reports tailored to your situation. Lending becomes extremely flexible. Need a large credit line secured by your investment portfolio? They can structure that. Want to finance a piece of real estate or a business acquisition using your investments as collateral instead of selling them? They can structure that too. At this level, you're typically labeled high net worth or even ultra high net worth. The focus shifts from just growing your money to protecting it, optimizing it, and passing it on. And here's the irony. By the time you hit this level, your access to cheap credit explodes. You can borrow millions at rates far better than the average person gets on a credit card. Meanwhile, people at the bottom are still paying 20% interest and $40 fees. Now, once you cross around $10 million, you're firmly in ultra-high net worth territory for most major banks. This is where you start seeing things that regular customers don't even know exist. Your bank may offer a fully integrated private bank platform where your banking, your investments, your loans, and your planning are all handled together. You might get access to co-investment opportunities in private equity, venture capital, or large real estate deals. These are investments with much higher minimums, often only available to people with 8- or 9-figure balance sheets behind them. You'll see strategic credit lines used not for emergencies, but for strategy. Borrowing at low rates against your portfolio to fund new investments, buy property, or handle big life events without selling down your existing assets. At this stage, the bank is functioning almost like a partner. They're tracking your entire balance sheet. They're coordinating with your attorneys. They're helping structure trusts, holding companies, and charitable foundations. You're not dialing a call center, you're texting your banker. They know your family, your goals, and your long-term plans. For most people, a bank is a place to store money and pay bills. For clients at this level, the bank is a tool to amplify wealth and control risk. Now, let's go to the top of our ladder. Between $25 million and $50 million, the way banks treat you starts to look a lot less like personal banking and a lot more like a corporate relationship. You may build what's called a family office, either inside the bank or independently. That's basically a mini company whose job is to manage your money. It coordinates investments, taxes, legal work, and reporting. The bank plugs into that structure with their own specialists. Credit becomes highly customized. Need financing against a private business you own? They structure it around that. Own a large real estate portfolio? They design facilities built specifically for it. Sitting on a huge stock position from a company you founded? They help you borrow against it, hedge it, or gradually sell it without blowing up the price. Everything is coordinated around big events. Selling a company, taking one public, buying out partners, transitioning wealth to your kids and grandkids. At this level, banks and wealth managers know that keeping you happy can mean tens of millions in fees and interest over time. So the service becomes extremely high touch, global, customized. Now, step back and look at the full ladder. At the bottom, when you have the least, the system charges you the most. Overdraft fees, high interest, minimum balance penalties, limited access to good advice. At the top, when you have the most, the system rewards you. Lower rates, better terms, access to private deals, dedicated teams whose entire job is to protect and grow your money. It feels upside down, and in a lot of ways it is. But here's the part that matters for you. You don't need to hit 10 million or 50 million to change how your bank treats you. The difference between penalty zone and preferred zone can be the difference between a few $100s in your account and a consistent 5 figures or 6 figures over time. If you're in that negative to low 5-figure range, your first mission isn't to impress your bank, it's to stop leaking money to them. That means getting rid of high-interest debt, avoiding overdrafts by building even a small buffer, switching into low-fee or no-fee accounts so your money can actually grow instead of getting eaten. As you move up into that $10,000, $50,000, $100,000 range, your job shifts from survival to strategy. Use the system instead of letting it use you. Qualify for better rates. Use tax-advantaged accounts. Start building real assets. Maybe it's a retirement account. Maybe it's a brokerage account. Maybe it's a small business. The jump to 1 million and beyond usually comes from a combination of higher earnings, ownership in something, like a business or equity, and consistent investing over time. Not just a better paycheck, not just cutting lattes. And at every level, banks adjust how they treat you based on one core question: how much of your financial life flows through them? So instead of asking, why aren't banks fair? A better question might be, how do I move myself up one tier at a time so the rules start working in my favor? Now that you've seen how banks treat you at every level from 0 to 50 million, I want you to answer this for yourself. Which tier are you in right now? Are you closer to overdrafts and fees, or closer to preferred client status? And more importantly, what would it take to move up just one rung on that ladder over the next 12 months? If this pulled back the curtain on how your bank really sees you, don't just scroll on and forget it. Take a second and turn that into action. Drop a comment and be honest about where you are today and where you want to be next. Are you stuck in the penalty zone, or are you already on your way into preferred territory? If you want more deep dives like this on how money, banks, and the system actually work behind the scenes, hit like so this video reaches more people, share it with someone who keeps getting hammered by fees and has no idea why, and make sure you subscribe so you don't miss the next step-by-step breakdown on building real wealth in America. Before you click away, ask yourself this: are you going to stay in the tier where the bank profits off your mistakes, or start moving toward the tier where the system finally starts working for you? And tell me in the comments, what's the single biggest money move you're committing to after this video? Saving more, killing debt, or growing your income?